So it affects the whole world economy. And what that will do is that other countries are going to start devaluing as well. It's going to be a race to the bottom. It's not going to get better. How do they do that? Well, by cutting rates, by spending more as well. That's the race to the bottom. Monday, June 30th, 2025, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at the dollar and why I think the Trump administration is deliberately devaluing the dollar, and it could get worse if the tariffs negotiations don't go too well. And we're going to look at why this is so today. Before I move further, just want to thank all of you for your interest in the channel. I'm very grateful for all your support. We're up to 142,000 subscribers, which is great. And I noticed, though, that a lot of you that watch my videos are not subscribed yet. So maybe think about subscribing. Also think about hitting the little notification bell to be notified of all my posts. I post a video every day. And another announcement I'd like to make, if you haven't heard yet, many of you have asked about merchandise, and we used to do some merchandise a few years ago, but we stopped because the Teespring store quality was getting worse. Prices were quite high, but now we've got the Rudy collection and a merchandise store that one of the viewers, Karen, who's from Florida, built up. I'm thankful to Karen. And yeah, it's up and running. One of the mugs is this one here, at Maneco 64, home of alternative economics and contrarian views. And on the other side, we got Rudy with his bullion bars, gold bullion bars. So anyway, the link is below in the description to the Rudy collection merchandise store, whatever you want to call it. So back to the dollar. And have you noticed, like in the past or even now, the United States Treasury, and I'm not having a go at them, I'm just being like factual. They like to criticize other countries for currency manipulation, devaluation, and now the U.S. is falling for the same. Well, they're doing the same thing right now because the dollar has dropped quite a bit since the beginning of the year. If you look at the dollar index, for example, we started the year around 110, and we're now at 97.12, so more than a 10% drop. So why is that gonna affect, or why is that gonna, or could get worse if the trade negotiations or tariff negotiations don't go as well? Well, because this is just like a tariff. The dollar has just imposed a 10% tariff on the U.S. as major trading partners, the countries that are part of the dollar index, but also other countries like China. So it's a 10% tariff as already. And why is that? Well, because U.S. goods become 10% cheaper relative to other currencies and other countries, and other countries' products become 10% more expensive. So that's the way I think the U.S. is going to do it. But the problem for President Trump is that he's got a huge fiscal deficit, a huge national debt to finance. And the more the dollar goes down versus other fiat currencies, yeah, foreigners will be less inclined to buy U.S. paper because you get hurt because the dollar goes down in value, and you get hurt because yields have been going up and the value of these treasuries have been going down as well. And we are seeing this debate in Congress or in the Senate right now to get Trump's big, beautiful bill through. They're having a bit of a tough time, but I think they're going to get it through before the 4th of July. That's what Trump wants. The latest news isn't great. FT is reporting here. It says Republicans struggle to pass Trump's big, beautiful bill as debate drags on. I'm sure they'll find a way out of this. Congress and they always succumb to bigger deficits and more spending, and that's going to make things even worse. In terms of what Trump's trying to do is he's trying to push the Federal Reserve to lower interest rates aggressively. I think he did an interview this weekend, and he said that, I quote him, we should be at 1% or 2%. Trump said in an interview with Fox News, as he said he was looking forward to getting somebody into the Fed who's going to be able to lower the rates. He also claimed that the U.S. economy remains strong despite Mr. Powell keeping the rates artificially high. So why does he think you need even lower rates if the economy is doing well? Well, it's because of the debt, and yes, because he thinks that if the Fed cuts rates aggressively, and the Fed can only cut rates to control short-term rates, he thinks that the whole of the yield curve, all the yields are going to drop. But he might be wrong about that. It could actually be backfire, and we could see longer-term yields like from 5, 7, and beyond start going up and bonds going down, and that would make financing Treasury debt even more difficult. And of course, we still have the debt ceiling situation to be resolved. This big, beautiful bill, if it goes through the Senate, it will have to go back to the House for some changes, and then Trump will have to sign it. And apparently the debt ceiling will be raised by 5 trillion if that goes through, so we'll have to see. But there will be a lot of debt to refinance. So Mr. Trump is between a rock and a hard place at the moment, because foreigners are abandoning the dollar, not completely, of course, but they're trying to find alternatives like gold, the Swiss franc, even the euro. And why do I smile like this? Or even the pound, because the euro, the pound, even the Swiss franc, I mean, they're not great currencies either. They're just fiat currencies. I would stick to physical gold, of course, but people still seem to believe that those are hard currencies. But anyway, so his problem is that one, but he doesn't mind because that acts as a tariff. But the other one is refinancing all the debt, and that's why he wants lower rates. He thinks that by the Fed being aggressive and cutting massively, even though the economy is doing well, he thinks that's going to bring down yields. I don't think the bond vigilantes are going to buy into that, and it could backfire. So that's why I'm saying he's between a rock and a hard place. So why is he doing all this? Well, because I'm sorry to say, he's much as a Keynesian as all the other politicians, because he thinks government spending, low interest rates, he wants a boost to the economy. He'd rather have the currency debasing or inflation rather than a sound currency. Yes, he's a little different in that he wants to keep taxes low, But and I'm all for that, but you need to also cut the size of government, and he isn't doing that. So what I'm trying to say here, yes, the economy is going to keep humming along. We have to see about this bill. If this bill doesn't go through, it could be a problem. But the people that are going to suffer are the people in the middle and at the bottom. The top 10%, top 1%, they'll keep doing well. But I think what Trump and his team, especially Bessent, think is going to happen is that it's going to provide more jobs. So they'd rather have the jobs and the inflation than no jobs and a sound currency, which is what wins votes. But it doesn't bode well for the purchasing power of your savings. You could say, well, put it in the stock market. Well, the stock market is in a tough situation. I spoke to Michael Oliver from Momentum Structural Analysis, and I highly recommend you watch that video. Things are not that rosy underneath the surface for the general stock market. Of course, there are sectors that look undervalued and could be a good place to be. This is not financial advice, it's just my opinion, and also Michael Oliver's opinion. He tends to lean more towards the precious metals, miners, especially silver, and commodities in general. That's the other thing about the weak dollar. It's gonna make the value of commodities go up. And why is that? Well, because commodity producers, be it in the US or outside the US, they're going to want more for their real goods in terms of a falling currency. It's really not, it's really that simple. It's common sense. So the dollar right now is in a down cycle, but there will be a day that the dollar will rise again against these major currencies. Or the dollar index will rise, but that doesn't mean anything in the long-term scheme of things, because if we look back at 1973 when the dollar index was created, it was trading at 100 and gold was at $85. We're now at 3,000. Let's have a quick look here. 3,290, and it's 7:12 a.m. London time, by the way. So what I'm trying to say, over the long term, all these fiat currencies are sinking, the dollar included, and they take turns. So there will be a season where the dollar will rebound. Will that mean that the dollar will be back as a major reserve currency? My money is on it not, because according to some surveys here, and this came out yesterday in the FT, Donald Trump's fiscal policy and Fed attacks imperil U.S. haven status, say economists. So there are a lot of people out there who are concerned. And it's not just President Trump who's done this. Over the years, it's been all of the administrations with the policy of using the dollar as a political weapon through sanctions and other ways, through freezing reserves, so to speak. And this is not improving. The other thing that I think foreigners and people in general are getting tired of is all this debate and all this to and fro concerning the debt ceiling, budgets, deficits. That's getting to a point where people are thinking, is this country, is the U.S. really that reliable? And I'm not saying that China or the Eurozone are reliable either, because they aren't. So there's only one thing that's reliable, that doesn't lie, doesn't inflate itself, doesn't go bankrupt, is not political. Well, that is gold, right? And silver is its sibling, its younger sibling, smaller sibling. So that's the way I see things. And yeah, for those of you who have been using my precious metals affiliates, they're still there. All the details are below in the description. I've got a landing page now for Miles Franklin and for gold investments in the UK. There's some links there and some promo codes if you want to get in touch with them. If you've never bought gold or silver, call them and talk about it with them. They'll help you get started. And yeah, that's how I see things. Currency devaluation, yeah, that's going to continue for the dollar. It's not going to help anyone. And by that, I don't mean people in the US specifically, even though it will, but all around the world, because, for example, if someone in the UK earns $100 and gets paid in dollars for doing some service, a year ago, this person was getting a lot more than this person is getting now. So it affects the whole world economy. And what that will do is that other countries are going to start devaluing as well. It's going to be a race to the bottom. It's not going to get better. How do they do that? Well, by cutting rates, by spending more as well. That's the race to the bottom. So let's quickly look at the markets this morning. So it's 7:15 a.m. London time. And I went to bed last night. Gold was unchanged, but I got up this morning and I looked at X, and some of the people I follow were a few hours ago said, well, Mr. Slammy's been here, but I look at gold right now, it's up 16 bucks at 32.90. But overnight, while I was asleep, gold got hammered down to 32.47. So it's rebounded really well. So did silver. We got down to 35.40. It's now 36.20. And of course, today is the last day of the month, the last day of the quarter, and the last day of the first half of the year. And yeah, gold last month, let's say in May, closed at 32.89. So you can see what's going on here. I would say the speculators, the technical traders that trade paper, even the bullion banks, they're trying to get gold down on the month, but I don't think it really matters, because if you look at this monthly chart, gold still looks pretty good. The other thing that I would say on the dollar index, for example, and I spoke to Michael Oliver about this in my interview that I published on Saturday. He said that the dollar index, if it closes below 98.34 today, that's a really bad sign. Not in terms of price or technicals, but more in momentum. So yeah, keep an eye on the dollar index. Yeah, right now it's way below that level. It's at 97.15, but you never know. Things can change. So yeah, 98.34, it's a key level. And let's have a quick look at silver, how it's doing technically. Let's see on a monthly basis where we are right now, around above 36. It's going to be the highest closing level really since August 2011. So silver is looking very good. I guess there's still time for them, Mr. Slammy, to come back and slam the price of silver today. But I would say that, yeah, 34.87 or that 35 level is the key level. Will they be able to get it below 35 today? I don't think so, but anything's possible. We'll have to wait and see. What about the other markets? Well, the Dow futures, that's up 300 points. The NASDAQ 100, that's up 144, and the S&P is up 30. So markets are still pretty stable. I saw that Canada has backtracked on some of its some tech rules that they had imposed, and Trump had called off the negotiations, tariff or trade negotiations, and now Canada is backtracked. So that's a win for Trump. There you go. But the currency market right now is very steady, not much going on there. The 10-year yield is up 2 basis points at 4.28. So with that, I'm going to wish you all a very good day. Take care. Bye.